Hey guys, it's Jay Coker with Secure Financial Management here with your economic update. Remember, at Secure Financial Management, we want to be your #1 financial resource. So you saw the title of the email there that says the next 10 years. I'm definitely going to talk about that. I'm not going to predict the next 10 years, obviously, but there is something from a paradigm point of view that I think is very important to get on your radar. We'll talk about that in the second half of this video. To start off, what I want to talk about a little bit is the activity we've been seeing in the markets the last couple of weeks. Give you a bit of a heads up as to what is occurring, what's causing that, and what might be an expectation for the future. So at a very high level, it's the expectation of rising interest rates, okay? We've talked before about how the valuation of stocks and the stock market in general is dependent heavily on interest rates. What's happening right now, I'm sure you've experienced this, right, is an inflationary event. Groceries are costing more, gas is costing more, stuff in general is costing more, right? And inflation is a real problem for purchasing power, okay? The $100 you had last year or the year before won't buy you as much as it will now as it used to, okay? And that's a problem because it's affecting everybody, whether you're wealthy, middle class, lower class, everyone is impacted by inflation and we can't buy as much as we used to. How do you fix that problem, okay? There's not a whole lot of tools, unfortunately, that the Federal Reserve has to deal with that. Essentially, the way that you tamp down inflation is by raising interest rates. I've already talked about the fact that there will be interest rate rises this year. 2, 3, 4, we don't know yet, but the expectation has been set for that. So obviously that is going to affect the stock market. It will affect certain sectors more than others. So knowing what's in your portfolio is very important going into this year. Let me talk about the second thing that we mentioned here, and that's the next 10 years. Okay, like I said, I'm not going to predict the next 10 years, but there is a seed I want to plant for expectations going forward. And that is that the next 10 years, we don't believe is going to be as good stock market return-wise as the prior 10 years, okay? Check out this graph we've got up here, okay? This is the last 10 years of returns for the S&P. These are pretty awesome. If we had another 10 years like this, believe me, nobody would be happier than me. It would make our job a lot easier, but I've got to tell you, I don't think that's realistic, okay? Look at these numbers. Out of the 10 years, 8 of these are double-digit positive returns. We've only got 2 there that are not double digits, and only 1 of those 2 is a negative year, and it's not even a negative 5% year. It's less than negative 5%. That's not a typical 10 years in the market. Okay, and I don't think it's reasonable to expect that going forward. This is the reason I bring this up. I believe in general we've been lulled into the sense of the stock market is easy money, constantly going up all the time, big returns like that graph that we just looked at. And this was evident in a gentleman we met with recently. He said, hey, I've done a little financial planning of my own. There's a lot I don't know. I need some professionals to do it. I need you guys to look at it. And I said, this is awesome. I'm glad that you've done some financial planning. Most people don't. Tell me a little bit about what you've done. In particular, what rate of return have you assumed your portfolio will get? And I was pretty shocked when he said 15%. I said, why do you think you're going to get 15% going forward, especially into retirement? He's like, well, that's kind of what I've been able to do recently, get 15%. That's a dangerous number to plan on because the likelihood of that actually happening is pretty low, we believe. So these next 10 years, like I said, I hate to be the one saying this because the last person that wants this to be the case is me, but I don't expect them to be as good as the next 10 years. And what that means is that having your portfolio invested as efficiently as possible and understanding the risk you've got in your portfolio, whether it's an investment portfolio, your 401k, whatever it is going to be vital. Guys, I hope that's helped demystify what's been happening the last couple of weeks and also given you some food for thought as far as returns and how the market's going to look going forward. As always, none of this should be considered investment recommendations. If you have any questions about your personal financial situation, please give us a call, 210-428-6250. We'd be happy to speak with you.